In exclusive, sources say that LIC has reached out to IRDAI seeking a review of surrender value regulations. Yash is here with more details on the same.
Well, Ekta, we just have about a month to go before the new surrender value regulations, which are issued by the insurance regulator, become effective. They start to become effective from 1st October. And just a month before that, what we've been given to understand is that the largest life insurance company, LIC, has written to the regulator seeking not an extension to the timeline, but a review of certain aspects of the increased surrender value regulations. Of course, we've been reporting constantly on it, how the surrender value was increased significantly, going to as high as 75% of the total premium from the current 30%. And there are certain aspects of the regulation where LIC has sought a review from the regulator itself. There are two specific points, if I could take you through both those points. For the calculation of surrender value, as per the formula which has been specified, one important element which comes in consideration in the calculation of surrender value is the 10-year GSEC yield. Largely assuming that at about 7%, the IRDAI in its regulation had given a 50 basis points cushion, which means the insurance companies could take the interest rate for the calculation of surrender value to be about 7.5%. The first ask from LIC is to increase that spread of 50 basis points. The number has not been specified, but the demand is to increase that spread, have a higher spread for the calculation so that the surrender value which they have to pay to their policyholders in situations of early surrender of policy comes down. The second, ask from from LIC is that, instead of hardwiring the 10-year GSEC yield into the regulations, which again assuming could be about 7%, let's have a plan-based interest rate, which means a particular insurance plan which invests in 30-year government securities should have the benchmark as the 30-year GSEC yield, and of course the plan which invests in 10-year government securities could have a 10-year GSEC yield interest rate as its benchmark for the calculation of surrender value. The difference in currently, as we see, for 30-year it's about 7.1%, and for 10-year is about 6.86%, but this could be a meaningful number as the number of policies for the calculation of surrender value increase, and of course the amount compounds by itself. So this difference is what LIC has asked for. First one, to increase the spread for the calculation of surrender value, and the second ask from LIC is to not hardwire the 10-year GSEC yield for the calculation of surrender value, rather have plan-based GSEC yield, which means 30-year, there could be 30-year GSEC yield, and for 10-year plans where investments are made, there could be 10-year GSEC yield consideration for the surrender value. This could, of course, ultimately bring down the surrender value which LIC has to pay to its policyholders and could be beneficial for them. So these are the two demands. We'll have to see if the regulator considers them positively or not.
Okay, all right, Yash. Clearly, that news has got the market excited. LIC now at the high point of the day, as his insurance stocks are doing well. And now, post this exclusive from Yash, we have LIC stock moving to the high point of the day.